Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for May 9th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Yesterday pre-market, we were looking for a rotation into 88.75 to 90 for a shot at buying the ES and pushing this thing higher. That happened to be right at the lows of the day, so right into our zone. Price pushed right into that area, was defended, and subsequently closed right at the previous month's high price, and we're still sitting above that area. That continues to be the key level and the key zone to watch. If there's any failure to hold 88s, there would be a return back towards 76.5, and again, that's an area that bulls have been defending. Any failure to hold 76.5 would then spark a rotation back to 53, 48, and perhaps a little lower. So right now, the market remains quite bullish. This range has begun to see some expansion to the upside, and 88.75 continues to be the key level there. If there's any break of that level, then we would rotate at least another 12 handles down into those 76 halves. Again, the market remains quite bullish, and remaining above 76 half overall on a swing basis would suggest a continuation toward 24.24 and 24.59.75. So those are the next two major upside targets for the ES. Now if we take a look here at the intraday time frame, here we are. Again, the previous session, very quiet trading behavior, not really active, not a lot of great pace and tempo, so there was really nothing to engage yesterday other than the one time where price drops into our buy zone and then price subsequently pushes quietly higher back toward 95s. That's about it. It was a very quiet session. Today's already, the pre-market and overnight trade is already very quiet, not a lot of pace and tempo, so it still remains virtually inactive at this moment. So you have to be very careful. But right here, 88.75 to 90 still remains an area where bulls want to keep bid at this time. And between 88 and 99, this is where bears are currently positioned, looking to keep two-sided trade at least at these highs before another push occurs. Outside of 2400 will begin the push toward 24.24 on a first target basis. Let's take a look at crude oil. Here's a look at crude. We'll go higher time frame right now. In the higher time frame crude, this is very interesting the way it played out. Obviously, we had a significant push, big high range days, Thursday and Friday, a major reversal, 2-point reversal by the time we even got to RTH, and now price holding at these highs. I mentioned that we could get as deep as 45.12, 45.20, and still remain bullish for a shot at rallying into 48.75 to 50.20. That's the zone we're looking for. Composite VPOC is 49.77. So we still may have some counter trend rotations here short term as this thing sees absorption ahead of the next push. So right now, as long as price remains above these 45.10s, 45.20s, the implication is that we would likely return back toward value after seeing significant rejection below 44s. It doesn't have to be the case, so we're still watching and following this action. But again, this is the zone where bulls are defending. But 48.75 and as high as 50.20 could be the next zone to target over the next 5 to 8 days. Now, if we take a look here at the intraday time frame for crude, we'll pop it up. One thing we saw here the previous session was how bulls wanted to defend, at least on an intraday basis, the 46.10 to 46.20 zone. That area was defended, at least early on. But then once price got outside of S3, we had the idea that defending 45.80s opens up a return back toward 46.50. That was the final move into the close of the session, and now prices have held at that zone here and traded a range since overnight trading. So right now we're kind of stuck in a trading range at the moment, and overall this 45.70 zone here still remains an area to watch. So if there's any failure to hold 46.20 here, we could see a continuation to retest these recent lows, and that could offer an opportunity to fade it back toward 46.70, which is the current highs at the moment. All right, let's take a look here at gold futures. Now with gold, we've had a nice bounce off of the 1221s, a key level. If you look at how it's played out here over the last couple of days, 1221 was a significant low here, and we saw a nice bounce back up. But what I mentioned at the time is that we're still in a downtrending market here, and price had failed to hold above the previous session's high, and I mentioned that was an indication of more weakness to come. And the market closed bearish, weak after that, closing just below the previous session's low here. Now we're holding basically at the lows of that move. The next target below will be 1205 to 1200 evens. So again, one of the easiest and best trades here is when you're in a clear trending market. If you're failing to hold above the previous session's high, that's an indication of new lows to come. And so we're on that cusp of new lows here, and it's going to take getting back above 1240 for gold to see any type of bounce at this time. So right now, failure to hold above the previous high suggests another continuation in the 1200 to 1205 up ahead. On an intraday basis here for GC, you're actually seeing price hold near these lows at the moment, and at the previous week's close is currently where bears are defending. So that's a very significant area. The previous week's low is here. So the next key level below will be the weekly 25% extension, and that comes into play at 1214. So that's likely the next key target down short term for gold if price continues to hold below 1228, which is the previous week's close. Above this level could challenge 1240, but again, bears would look to defend that key level from below. Lastly, let's take a look here at the NQ. We'll bring up the higher time frame NQ. With this one here, obviously this has been quite a bullish market. We've seen just a significant continuation higher. We've talked about the stocks that really help push this thing higher. There's 5 key stocks, and this thing continues to show quite a bit of strength. 5600 continues to be the key level, and at the moment we're holding above yesterday's lows, which had very, very clear lows, 5630s, and running the stops there would open and challenge 5600. 5600 has to remain bid at the moment for a continuation to the upside. Otherwise, there's quite a bit of stops there, and that could lead to a rotation back into this LVN. At some point, it's expected that we will rotate back down and retrade some of this ill-traded zone here before. And should we drop even as low as 54.75, that could still be an opportunity to buy on a swing basis for a continuation to the next upside key target. We do have the next upside target at 57.25. We've reached the 25% monthly expansion target. Any pullback could still be a great buying opportunity for a continuation into these upside targets for the NQ. Now on an intraday basis here, what we see, very clear stops below the 54.30s, right? That's going to be very important there. You can see yesterday very clear support in that area. Price traded in a nice little digestion zone here and traded two-sided trade throughout the day. Now price is holding just above that range, and if there's any failure to hold, say above 56.50, right, 56.52, then that would likely challenge the stops below, and we could see a move back toward the FOMC key level. So keep that in mind. The FOMC key level is going to be that 56.15 half. So if there's any rejection up here, this may be the next target, 5-day value and the FOMC level from May 3rd. But overall, the swing trend remains up, so any pullback at that magnitude would offer a great buying opportunity on a swing basis. All right, that's it for now. We'll see how this thing plays out heading into the rest of the session. Good luck and trade well.